The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon till 1 p.m. every market day. My pleasure to be here. And the Dow is down 100. Look at this. The Dow is down 103. Let me show you the E-mini, and there's the particular techniques that we're talking about here. I'd mentioned for the last 4 or 5 sessions that if the E-mini, as well as the Dow, because of the skinny leg here, a pattern that I call the Chapman wave Roman candle, that if there was a move that had the E-mini hold for 220-minute bars underneath around about 25.74, 73, I had said, there's a real good chance that you will test the low that was made on the, what did I say it was, on November the 9th. And that would be at 25.63.25. We just missed that yesterday because we only had a very brief time below. And now look at this. There was a pullback overnight, very sharp pullback. And one of the things we're looking at is that the E-mini this morning for 2 hours now has been underneath that 25.73 level. And in fact, what happened is we went below, we went to 25.55.50. I think that this is the day where it doesn't work. We did have what I call a Chapman wave Chapman wave Trin gauge, a particular technique that I've developed over the years using Richard Arm's short-term trading index. I do not use it in the least the way he used it. I use it purely as a number measurement for me. So let's go through this, because now what we've got is a good chance that this week we're going to see a peak E/B in the weekly chart of the E-mini. And I want to go through this very carefully. And because I've got a webinar coming up on Monday night, and it's going to be one of the most important webinars I've had in a very long time, because it's projecting out to 2018, and it's projecting out in areas that are really tough. But I think I have some sense of what I'm looking for based on the technicals. So it's going to be very comprehensive. It's going to be looking at certain areas where we do want to be long, certain areas where you just don't want to be there at all, and certain areas you want to be short. So yeah, it's going to be something very interesting. I'm going to be talking about everything from the chart formations to inflation, deflation, yields, autos, real estate, socioeconomic, political nuances in the next phase of this mega bull market. I'd spoken about 2 years, maybe it's almost 3 years now. I said I was anticipating some kind of Victorian age, and that you might think that in every single show, even in the news, when you hear 4-letter words just coming out of everyone's orifice, there's going to be a change. We're going to go to a period where it's going to be really unfashionable to be doing these things that historically have always been a taboo. It's just the way it is. It's got nothing to do with prudence, anything. It's to do with the way fashion works. I mean, talking about mustaches, tattoos, this worldwide stock market euphoric phase that could still happen because many of the countries around the world, the stock markets in those areas are extending. They're making either new highs or recovery highs. Even going to mention something about a potential for a third party here in the United States, and certainly stocks that could benefit or weaken from this particular phase that's coming up. All right, let's get back to the nitty-gritties here. Let's go to the Dow. IND, okay, here we go. Dow is down 100 and, now it's down 96 at 23,000, it's 103 at 23,305. There's a technique. I have 2 webinars. One is on Monday night. This is for subscribers. You can join in by just signing up for my newsletter. You'll get a month free. And if you are a subscriber, it'll be it's going to be something that from my previous webinars is extremely comprehensive, which is why I usually like 90 minutes. I also like to take questions. I like questions sent to me beforehand so we can discuss them appropriately. following that, in December, I'm going to have an all-day webinar on the Chapman wave techniques, the methodology in the Chapman wave, counting the waves, money management. This left side, look at this left side, right side price time match. I chose a particular price point, and it wasn't the midpoint. I love when it's the midpoint. I call it the plumb line, but sometimes you have to use other techniques. Well, in this particular instance, the low of 23,251 that was made on the 25th of October became the part of the left side structure that I was looking at. And I showed my subscribers, I was looking for a right side structure that said maybe by today, but certainly this week, we should be testing 23,251. There was also Chapman wave inside wedge target line, plus the arch formation. And what did we do today? We went right under 23,251 to 23,242. But the MACD, the moving average, I'm going to teach about the MACD and stochastic, are still extremely negative. It says that any rally, and all of a sudden you're seeing the 9-period moving average, this black line, moving down from moving up for months. Look at this. It's been moving up since it turned around that big gap up day on the November the 11th. Now remember, we went long. Some subscribers are long the Dow position from that 22,290 level, because we got in after that gap up. I said, uh-oh, this is really serious. This has got the MACD turning up, stochastic turning up. So subscribers are long, but we also now have 2 short positions in the Dow. So one is an intermediate term position, and the other 2 are I'm calling trading positions. Turns out that they might or might not be trading positions. I might be holding them. We'll see, but at least we've got some leeway in which to make decisions. So these are techniques that I'll be teaching in this all-day webinar coming up in December. For that, there are a number of benefits that you'll be getting. But what I'd like you to do is go to the front page of TFNN and check out the check out the webinars. Right here, you'll see it. But even more important, we've also got the, where is it? There, Chapman Wave opening call. Because tonight you've got a webinar with Larry Pesavento, and that's going to be very interesting because it has to do with Bitcoin, well, it has to do with these different alternate currencies. So what we're looking at here is a webinar. How can I'd like to put this to be articulate as possible. It's a webinar that's going to be looking at historical levels. It's going to be looking at not having had a pretty decent consolidation in any of the markets for a long time. It's going to be talking about the potential for something to happen sooner rather than later, and then another big move to the upside. So these are things that if you have a portfolio, if you are invested in the market in any way, even if it's just monthly, you're putting in money into your 401k or whatever it is, your IRA, I would hope that this is going to help you. We've had some really nice positions, taken nice profits, still have a couple of positions long, and so I'm anticipating that there's a lot going on here that could benefit you. So we'll go back to the market right as soon as we finish this break. Dow's down 95, S&P's down 9.91, and we'll talk about the different sectors and what's going on here and what needs to break down before we can get a more substantial decline. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including: can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation, what stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So the E-mini's down 10. It went down to the 25.55.50 level, trough F in the Chapman wave, and then screamed to the upside, hit the 200-period moving average. This is green line. Look at that resistance from this green line. This is the 200-period exponential moving average, and now is struggling to try to break above the 9-period moving average, the black line, 25.68 is the number to look at. So we'll be watching this closely. I'll just make it real clear. Going above 25.73 is very positive action, considering what happened earlier this morning, and holding there, I should say, holding there for 3 10-minute bars over a period of half an hour. So one of the bars might not, but holding there would be very positive. And under 25.63 another time today would be very negative. Let's get out of that. Let's continue the look at the markets. So that's the Dow. The S&P is right now, as I said, oops, I hit the wrong thing right there. Dollar, SPX, X. All right. S&P's down 9.80 at 2568.94, way below the 9-period exponential moving average, and that's at 2580. And what we're looking at here is really the weekly chart, which has started to suggest very strongly that that 9-period moving average of 2554, this was the weekly chart, is kind of an attractor, a magnet. It wants to be pulling the price down. Most importantly, what we're looking at is that that monthly chart is still extremely strong technically. So the parameters to watch, a move today below 2569 right now, 2563, no, 2564. Another pullback below 2564 suggests that you'll see the S&P close very weak today. A push above 2673, I think it is. Yes, above 2573 would be, in fact, be very positive action. Okay. QQQ's NDX 100 trading vehicle, trading under the 9-period moving average, being one of the stronger indices. Even the weekly chart says, yeah, maybe you'll make a peak E/C this week, but look how beautifully it's held. But I'd say that a close below 152 to 151.80. What was the low today? Low today is 151.78. So a close below 151.78 would suggest the QQQs trading 152.67, down 64 cents right now, are vulnerable to further selling. A push above 153.50 would be very good action. I think that's going to be tough to do. Let's do the IWM. IWM made a lower low, keeps having these green candles, but with lower lows every day. Is trading at 145.93. Will this be the first to bounce? I'm not sure. It's under the 9-period moving average. That's what I was afraid of. And we're going to be watching this closely. Resistance is at 146.90s and a break under 145 again today. It's at 145.94 would be very negative. Let's go to gold. Look at gold. This is very interesting. Trading down 5 at 12.77. What's really important about it is that it's gone to a leg D. Because I thought that if there was some kind of international discomfort here with markets doing weird things over the next few days, just waiting and watching to see what happens with the tax, what happens with just all the international climate. My thinking was that we would buy the gold miners, just a small position, because gold really should become a let's call it a safety factor. If there is really discombobulation going on, I'm looking at this and I'm saying, stick to your methodology. Your methodology, Mr. Chapman, is that at D's you got to watch out. Number one, it's just made a leg D. Number two is that the weekly chart still is not very positive. So maybe we'll have to extricate ourselves from it. Well, just a very small stop that we put in. Very little risk in percentage terms. But that's what I was looking at. And what's fascinating is that the dollar pulled back very sharply, and now it's come back. So it made a lower low. It went to 93.40. And we are still long. So I had these two positions. One is gold, one is the dollar. That's kind of contradictory. But I'm looking at the dollar. I've got a feeling that it's the dollar that's going to cause some of this disruption here. And then maybe gold has to wait a little bit longer. That's what I've been thinking. I don't know why I suddenly got a little emotional about it today. It wasn't a very logical step. It was more a forced step. That's what I think. I believe that the dollar is the currency that has longer, more intermediate term strength. And that's what I'm looking at. So let's see what happens there. Meantime, dollar's up 2 cents after being down quite sharply at 93.87, and gold and silver have been down. Silver is now down 0.06. They also got stuck at that 200-period exponential moving average, the orange line there, and it's pulling back to the 9-period moving average. So today would have been the day for gold to really move, and it isn't. Here's another thing that I'm looking at. The XLF pulled back very sharply, and now it's up quite nicely. It's up 9 cents at 26.20. This is, I believe that the financials is still an area, even though bonds, let me just show you here, the bonds are screamed to the upside at 125.91 plus 71 on the TLT, the iShares 20-year Treasury bond ETF. And my contention has been that if the market is going to pull back sharply, bonds should go higher. But if bonds should go higher, then yields are going to come down. And if yields come down, that's not very favorable to the financials. But I think that the financials might be looking at something else. So my contention has been, and we'll discuss this in my webinar, that the financials looking out could in fact still have a very strong up move. The timing is going to be a little difficult. We did have Bank of America. Unfortunately, we got stopped out, certainly got stopped out for over a 10% gain. But I'm a little upset. I don't know if we'll be able to get in at that really good level. We got in before. We'll deal with that. Profit is a profit, especially a nice profit. So now let's go to high-grade copper. Now, high-grade copper is making lower lows. And I've been talking about this peak D in the daily, peak E in the weekly, and a leg D in the monthly. And I would not be surprised if copper's got more sideways to down action to come rather than upside action. And if you want to put it together with crude oil was down sharply. It's now down only 33 cents at 55.37. We have a commodity index. I believe so far we are still long. Yep, we are still long. I haven't been stopped out. Still a very nice gain so far. But this is going to be very interesting. Why? Because crude oil says that this is the week that if it was going to break, it had to go to the 54s. That's my thinking. Because if it goes to the 54s, then that 53.49 level of the 9-period moving average in the weekly chart of crude continuous contract of crude oil is really saying, hey, Sideways action now. We've had that big move. Politically, there isn't such a strain. But if it holds here, it says, crude oil is still active as a potential to pop to the 59 and to 60 level. So I'm watching this real closely. As I say, 54 says, that could be it for crude oil for a little while. What am I missing here? I'm missing XLF. We did that. I wanted to say that the SMHs, I still think that the semiconductors trading down 81 cents at 102.48, this is going to be the clue. Because if the semiconductors break 101 support, I think that finally says they could be pulling back there. They're still spectacular technically in the weekly and the monthly charts, but the daily chart could say, aha, time for a break, time for a breather. I think Applied Materials Thursday has earning AMAT trading at 55.73 down 69.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. A couple of questions I had here. Basil, do we need to buy RF before it leaves the station? What say you? RF is Regions Financial Corporation, trading at 15.80, up 11 cents. And this is what I'm going to say, because Peaky in the Den, I know your style is to buy and hold. You like the longer term outlook, and this hasn't yet made even leg C in the weekly, and even in the new maybe C, D, E. This might be new and A, B. Yeah. I'm going to say in your case, 15.80, I would start my position right now. This is just the starter position, and I do expect that it's going to possibly go to leg D at 15.87, 1 penny above peak C. Remember, we're always looking for Ds. And then there could be a little bit more of a consolidation, but I think that there's tremendous, in your case, I believe that 15.81 right now, I'm pretty sure you would have a stop in the 15.20 to 15 area. So for you, it's a wider stop than what I would normally do for subscribers. But I do believe that you would have that kind of stop. So yes, in your case, I would say I would start a position, and the position that I would start is one that says there's a chance that it could, if it goes into 16.30 really quickly, you might not be able to add to it. So I'm going to say a position that's a little bit more than a small position. Maybe the 1/3 out of 3 positions. This could be the 1/3 position. This is in your case. Remember, this is not for everybody here, because a percentage move from 15.81 to 15.20 turns out to be rather a big percentage, but that's fine. Okay, so let's do this. Another question I had. Whoops. KBE. KBE, which is the regional, a lot of regionals here. The regional ETF, Spider Bank ETF, up 24 cents at 44.78. Look at that. I got a feeling that I might have to struggle now to get back into these financials. That's okay. We've got a bit of a cushion now, so that's okay. This is good action at 44.78. And I'm surprised at doing that with the yields coming down. So let me do this. I'm going to say that KRE has tremendous at 44.78. It has tremendous support on the short term at 44 to 43.50. In the intermediate term, if it takes out 43, I'd say 43.40. If it goes under that, you've got to be prepared to look at a little bit more consolidation. So in the meantime, KBE trading at 44.77 is another good sign, same as that XLF. Yeah. Oh, the XLF did hit the 9-period moving average at 26.27, and now is pulling back a little bit, but it's still up at 7 cents. You know, my eye says that there should be more consolidation in the financials, and as a result, that's the only reason why I was thinking, let's take profits if we can, and we can always get back in. But the next 3 sessions, that's today, the rest of today, Thursday and Friday, going into early Monday, is going to be really important for the overall market, not just the XLF. So now let's take the next question, which is Goldman Sachs. Yep, Goldman Sachs. Let's see what that's doing today. Goldman is down. Goldman's down 72 cents at 236.52. Fascinating. Remember, there was a time back in, let me look at the long-term chart of Goldman Sachs. There was a time going into the high of 2007 where Goldman could do no wrong. It just, I think they said something like out of the 180, how many trading days are there during the week? 180 or 200? It were like 4 days they didn't make money. They were always making. Now they don't say anything. So something's happened, but I do believe Goldman Sachs is going to be the big winner in the financials maybe next year, 2018. So it's something to keep in mind, but right now it's not doing very well at all. Target, question about Target. And yeah, Target came out, said that earnings, everything seemed to be good, but I think that the Christmas outlook was not. So they're down 554, down almost 10% at 54.55, made a peak C in the weekly, a peak D way back in 2015. I think it was May or something like that. What was that? June of 2050, it's 85.81, trading at 54.61 right now. Oh, these retailers, not all retailers, but let me tell you, the ones that have been hurt have been so badly hurt. You wouldn't have, let's see the RTH. Remember, I was looking at the RTH yesterday. I said that peak F top could be significant. Whoa, look at this. So yesterday, it gaps down, closes at the high of the day. Today, it gaps down. It's at the high of the day, still not even closely filling in the gap, but it's at 82.91. down just 53 cents. I think it's worth watching these retailers because I suspect that in the amalgam of all these market vectors, retail, ETF, RTH stocks, Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, Target, you see, TJX also got slammed yesterday, just goes on and on. I'm thinking that the information we get going into Monday's webinar is just going to be really important. Question in the den, at some point retailers are a buy. Yeah, I think at some point they will be a buy, but right now they bye-bye. Bye-bye. It's a real problem, and not all of them, but certainly a lot of them. So let me do this. I'm going to say, I want you to look at OTH. Oh, the IYT. I want to look at the transportation index, down again, a leg F to the downside, almost at the 200 period moving averages, the S and the EMAs. Wow. This is not good. You see, this is another reason why I'm rather cautious on the market, because if the financials are really telling you, the financials are saying one thing. The transportations are saying another thing, and it's saying there's a sector rotation that's potentially going around, and we need to look at this very closely. Let's go to Rich in Portland. Is that Portland, Oregon? Hi, Rich.
It is. Good morning, Basil.
How are you?
Excellent.
Good.
Say, I was concerned or looking at NRZ again. I talked to you, maybe a month and a half ago.
Yeah.
Do you see this as a possible entry, or is it starting to fade?
So this is very interesting, and I've been looking at various this is New Residential Investment Corporation. I believe it's some kind of a REIT. It is a REIT, right?
Yes, it is. Mortgage
Okay.
REIT.
Okay. Oh, mortgage REIT. So this is very interesting because it made a peak C in a. You remember I was discussing the left side, right side price time match, and it did that from the high of 21st of April at 17.86, 2017, comes down in July to 1504. Doesn't sound like much until you say, hey, wait, almost 3 points in a $17 stock. That's it's about 18%. Then it rallies all the way back and then squeaks to a new high. The high becomes $17.91. And then it pulls back, but it holds the 9-period moving average. Now, I actually like what's going on, the sideways move. I would prefer to see it go a little higher, to say, no, I'm not interested in the market. I'm independently going higher. This way is holding well, but it isn't actually leading. Let me do a little work. Can you hold on through the break?
Yes, I can.
Hi folks,
Great.
Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, we're on with Rich Reinforcement. We're looking at NRZ. This is New Residential Investment Call. This is trading at 17.39, just down 6 cents. Now, so, Rich, you wouldn't happen to know the dividend yield at this particular point?
Yes. Just a second here. It just went ex-dividend at the end of September.
Oh, September, October, November. So you got all the way through to January before you actually get a dividend.
Well, it goes ex at the end of December.
Oh, it goes ex at the end of December. Is this paid annually or biannually or what?
Quarterly. And
it's actually
right
quarterly.
now it figures out to about 11.47% annual dividend.
Okay, now that's the reason why I wanted to ask you about the dividend. I'm always a little suspicious of anything that's giving you a dividend in this climate, and it's been this climate for quite a while. Anything above 8%, but it's really above 10% that I start to say, wow, am I risking? So 10% means you got $1.07 in risk of the stock, but you really have to be holding it for quite a while. You'll have to hold it all year from here until next year. The way I'm looking at it, and I suggest that if you would be buying it, you'd really be buying it partly for the dividend, but partly because there would be a chance of capital gain. Would that be correct?
Correct.
Okay, so I'm going to suggest it's trading sort of stuck in a range right now. If you were to participate in a dividend that was coming up in 3 to 4 weeks or 5 weeks, I would say that dividend, even if it's a quarter, let's just call it 2%, because you're not getting the full dividend, you're only getting the quarter of the dividend. It's a little, I'm not seeing it. No, I do see that it has a chance to go to a leg D in the weekly chart. And that would be very important. Why? Because it says I can go to 17.92 or higher. That's very important. On the other hand, what I'm really looking at here is if it gets stuck and it just goes sideways for a while, and then it starts to dip and you get out before the dividend, that's not really a win-win. It's not really a lose-lose, but it's not a gainer. It's really kind of a waste. So I'm going to suggest that, and I'm not even sure that this is one of those cases where if I say to you, buy a small position here, what's the small position going to do? Because as a dividend stock, you really want to be buying so that you get a decent amount of money for a dividend. So I'm going to say to you, let's leave it for the moment, but either text me or give me or send me an email or give me a call anytime you see this thing trading at 17.55 and it's at 17.39. Sounds like, oh, what's the big deal? 16 cents. It's a big deal because it just hasn't been able to do that for 5 trading days. But if it can get to 17.55, I think we're looking at something a little different in this market environment. And that's going to tell me to say, okay, now I'm going to say to you, you can buy it. And then I'll know exactly to say, look, let's keep a stop a penny below the low that was made on the 10th, which is at 17.22 was the low. So 17.21, I think that's pretty reasonable. But at the same time, I need to see it moving higher. I need to see the technicals improve in the daily. They haven't done that. So I'm saying let's hold off, but that would be a criterion for me to reassess. So give me a yell if you see 17.55 at any point, and then we'll relook at it. Why? Because I'm looking for higher highs right at this particular point if the market is going to continue making lower lows.
Okay. And that ties into, at the time when I talked to you, you had been into Two Harbors, TWO.
Yes.
And you got out of Two Harbors right before they did a reverse split, but also spun off their commercial mortgage. So you got a certain number of shares of their new commercial mortgage trading.
Oh.
That's what happened to Two Harbors. And I think that's what made you
I looked at it
bail.
the other day. I thought, what's going on?
Yes. So you're probably thinking the same thing if you don't see some movement out of this range of Two
Out of
Harbors.
1545, correct, yes.
You wouldn't get into Two Harbors either.
The fact that they did that sort of changes the chart formation. So I agree with you. I want to see strength, and especially in this environment, if I do see strength and it comes in these REITs, I think that we're looking at the safety play for many investors who are looking for dividends. But I'm a little concerned at 10 to 12%. That's kind of high. I mean,
Yeah.
there's really
Two
not
Harbors
room,
is over 13 now.
and there's not much room for error. You see, that's the thing that, you know what, I'm going to try to do a little bit of research about that. Maybe this is kind of normal for these stocks. Let me think about that.
Okay.
But in any case, so with TWO, Two Harbors, if that's trading at 1546, if it starts to trade in the 1575, 1580 area, give me a yell. We'll look at it again and see if there's something to do there.
Okay. All right. Thank you very
for
much,
those
Basil.
observations as well.
And I hope it's cold there in Massachusetts.
Oh, you hope so? Well, it is.
Well, because I bought the U-Gas.
Oh, you bought, okay. Yes. Well, I think we're in for a pretty cold winter. The way it started, it was beautiful, and now the cold is pretty severe. Oh, U-Gas is down a little bit. Watch that U-Gas. That trades, it doesn't always trade with the weather, but in the over a period of a winter, you should see U-Gas start to move higher. But we'll see.
Well,
Thanks so much
I'll
for
keep
calling,
my
Rich.
page bent at in the Old Farmer's Almanac.
Oh, okay. Yeah, I've heard Old Farmer's Almanac.
It's really scientific.
Yeah, right. If you
Okay,
get out of
Basil,
bed,
thank you.
if you get out of bed on the left side, the market's going up. If you get out on the right, it's going down.
Yep. Okay, thanks again.
Thank you, Rich.
Bye.
Speak to you soon. So, folks, the Dow's down 92. I had a couple of questions which I'd like to get to. So, SLB, which is Schlumberger, we got out of our the other day. We made a break-even trade on our oil rig, and then it just kept coming down. Schlumberger just down, down, down. This is an issue. Schlumberger Oil Service. Let me just go back to USO. A lot of people are emailing me here. What about USO? What about oil? I have to just tell you, USO is holding okay at $11.11. But if USO, which is United States Oil Fund, actually takes out $10.80 anytime in the next week, I've got to watch. I'm going to watch this real closely, because then it's saying there's an abundance of oil around, and it's not going to impact the oil sector like you would if there was a scarcity. So we'll watch that real closely. That was that question. Oops, another one. Let me just quickly check here. I did that. Yeah. Okay. So we've got a break coming up. I want to talk a little bit more about my webinar and my all-day session of the Chapman Wave methodology. So I'll be right back straight after these messages. Dow's down 90, S&P's down 9. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Stocks like this. You see this move in Take-Two Interactive trading at 117.14 down $1.74, having made a high just over 120, and just a year ago was trading in the 40s. Made a high of 120.62 with an open round number 120 gap up high on the 8th. So this is the type of stock that I'm looking at. I'm saying, you know, there are so many signs that gaps, recent gaps in many of the stocks had absolutely spectacular moves, and they really had, most of them have had very good earnings. Well, what happens in stocks that have very good earnings and then gap up to new record highs and then hold for quite a while, in this case for a week or more? Does that say, number one, any pullback should just fill most recent gaps and then go sideways? Does it say, uh-oh, that's a climactic move to the upside. Next quarter won't be the same, but you've got 3 months to wait to find out. So the only way I can do it is say Chapman wave peak F gap up, says in the daily, be careful. Round number, 120 all-time high, then it squeaks just a tad higher to 120.62 and then closes very sharply lower that day. Says, uh-oh, very easy. Any push above 120, any close above 120, this is recycled to the upside. But that's the level to look at. If you were short at 117.24 right now, 120.01 would be your buy stop. Nice and easy. But the weekly chart has gone to either an F or a C. The way I'm looking at it, it has all the characteristics more of an F. It could still go to a G, but it might not go much higher. So I'm looking at this, and I would immediately join. These are the techniques that I'm going to discuss in my. I'll just partly discuss them on the webinar Monday night, but in 3 weeks' time, I'll be discussing them in great detail. The rectangle formation. Look at the monthly, screams to the upside in leg E, but the technicals are still very strong. What do you do in a situation like that? We'll discuss that in great detail. And of course, my webinar Monday night coming up. I'm really looking forward to it, just to cover a great deal of things. Start positions looking at the coming month or 2 or 3 coming in the market. I'll be right. Well, this is it. Thank you for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.